Hey, this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex training videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry, where we send you our exact trades right to your inbox. Pause the video now. Go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. Alright folks, so today's training video is going to be a relatively short one, but we're going to show you two different ways to manage your trade. In fact, if you're new with our service, or whether you are new of checking out our videos, I want you to make sure that you've watched our Forex equity and risk management videos. We have two videos right on YouTube you can watch. In fact, I'll pop up a link here right now. If you have not watched those videos, I'd watch those videos first. Start with number 1 and then go to number 2. And then come back to this video, because in those videos it shows you how to manage risk capital. We're talking about calculating the amount of pips that you're going to risk on a trade, and to protect your downside, and then how to manage your trade from there. So what we're going to show you how is stop loss management. We're going to show you two different methods. Now, when we send our trade signals out to our customers, a lot of our customers are looking for set it and forget it trades. So let's look at a trade here on the Aussie yen that we just took last night. And we are already up, pushing almost 80 pips right now, 75 pips. So we're looking really good on this trade. So I'm going to show you where we got in. We sold at 80 the Aussie yen at 88.30. Okay, so we sold right here, about right there. Okay, let's see if I can zoom this down a little bit more. Okay, and then we put a stop loss at 88.83 above these highs. See, the reason that we did this, price continued rejecting off this for 3 days. Okay, so we took the trade last night. The price took us in, and you can see right here I put a stop at 88.83. So right there is where we put our stop. Right there. And we are looking for price on this to drop down. Now, I'm going to tell you right now, I never sell the Aussie yen, but I'm looking at a very short-term reversal on this pair, in which we're going to get in and out. We're going to pull out some pips, and we're going to take a little bit of profit and see how far this thing runs down until we get stopped out. We'll let this run until we probably get stopped out. But as further we go down, we're going to continue moving our stop down further into the money, we call it. Right? We're going to move it down, down, down further until we eventually get stopped out, and the whole time we're pulling out parts of our profits. So the longer we go, the smaller the amount of lots that we're trading at once. And we're looking at for our profit target at 86.40. So the profit target we're looking for is about right there. Okay? So I'm going to color this one green so you can see that. Now, so you can see we're right in between this midpoint section here. Let's see where price is hitting. Okay. Yep. We're going to be in good shape. This thing is going to continue going down a little bit further. But what we're going to do, there's two different ways you can manage these trades. Now, we talk about risk to reward ratio. One is one of the things we talk about. And you can see that we sold at 88.30 and our stop loss was 88.83. So we have a 53 pip stop loss. And usually I tell my customers never, or anybody out there, never to leverage more than 2% of your account balance on one given trade. All right? And we'll get into a different video later about percentage ratios as percent of versus a fixed dollar amount ratio. We'll talk about that in a shorter video in a few days. But right now we're talking about a 53 pip stop loss, and I tell people never to risk more than 2% of your account balance on one trade. So if you got an account balance of $1,000, you want to make sure that if this stopped, you sell here and you get stopped out on this trade, that you want to make sure that you do not lose more than 2% of your account balance. which would be $20 on $1,000, right? Now, so here's how this works. Since we have a 53 pip stop loss here, and we're dividing, make sure if you're leveraging 2% of your account balance between those 53 pips, then at the same time, when price moves 53 pips, every 53 pips that moves, you're gaining 2% on your account. So on this trade, we're looking at, we sold at 88.30. We're expecting price to go 86.40, so we're talking almost 200 pips. So the reality is on this trade, this is why I like this trade, the risk reward on this is 1 to 4. 53 pip potential loss if it goes against us, almost a 200 pip gain. So if we could either lose 2% here, or we could gain, if we stay in the entire trade straight down, we could gain 8% on one trade. Now this is why I like this. The trade setup on this last night was perfect. So I want to show you about 2 different ways of managing the trade. First is what we call the set it or forget it. Now you can enter this trade short. You can set your stop and set your limit and just wait for the trade to go all the way down, and boom, when you hit your profit target, the trade automatically closes out in profit. That is set it and forget it. Now another way to manage a trade is if you have the opportunity to watch this trade over the short period of time, which we're going to do this on this trade. We're going to manage it a little bit different, and here's what we'll do. For instance, right now we're going to close out a nice chunk of our lots out, about 70% of our lots, at 87.55 to 87.50 range. Okay, so you're going to close out a big hunk of your trade, and then you're going to move your stop loss to break even, or even 1 or 2 pips up. Okay, you see what I'm saying? So here's what happened. At this point, you've already made your profit. You've at closing 70% of your trade, as many pips as we're up right now, you made about 2.5% on that trade. If the market reverses, and the Aussie yen shoots back up and hits gets stopped out, guess what? You closed out your trade with a few pips, or you closed out the remaining 30% at break even. You still made your 2.5%. Are you with me? You want to make sure you minimize your downside. So what we will do is, as this trade continues dropping, we'll start closing out profit here, and then we'll start moving our stops above swing highs. We're going to keep moving down while we keep moving our stop. We'll keep moving down and keep moving our stop. You understand? So eventually what we're doing is we're taking out profits all the way down, and then we're locking in our profits on our stop loss all the way down as well. Does that make sense? So I hope the video made sense to you, and look forward to popping out the next video here shortly. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.